Hello everyone, and welcome to our new webinar, like each month on the FX Street, where I will cover some of the majors. So let me look in the chat here. I have visual, but no sound. Yeah, I was muted. So okay, sound is okay, charts are okay. So let's get started. Now, before I begin, let me just give you the hint that we have the Black Friday discount for our services. So for monthly subscriptions, 50% off lifetime or until you cancel. So if you're interested in that kind of a Elliott Wave analysis that I will now show you in a second, then make sure to check our wavetraders.com website. So like each of the month, I will walk you through these specific Elliott Wave patterns that I see and track on a daily basis for our members. So I will start with the euro dollar as always, as you know, the most popular pair. So what's going on this week? Well, it's been quite a slow week, I should say. It was a thin trading, but still we are seeing some very nice moves for the last two sessions. Of course, as you know, the FOMC minutes showed that Fed will be more careful with hiking rates going forward, meaning that somehow this was very dovish compared to the past meetings. So in my opinion, this of course makes speculators think that there will be only next 50%, sorry, not 50%, but 50 basis points increase, and maybe they will stop with raising rates at the start of the next year. So if that would be the case, then we know that the US yields will come to the downside, and if that will be the case, then the US dollar will fall further. And you know what they say, if you have the US dollar right, you have everything right, okay, regarding the direction, because everything is linked. However, what is really important when this Fed can make one step back or slow down a little bit, well, there are still other central banks that want to achieve the same goal. So in the US, inflation calmed down a little bit, and now, of course, in the euro zone is not the same. So they will stick with the hawkish view there. And they are even looking for, in the next meeting, there's a bet that they will go for 50 basis point increase. So maybe this kind of a divergence, because still ECB, as you know, is lagging, maybe this kind of a divergence will make euro even stronger versus the US dollar, or maybe that's already the reason why we are seeing this better euro for the last few weeks. Now, if you go to the wave count here, well, still looking some very big picture here. I'm not really fan of big charts because, as you know, now I trade mostly maybe intraday or maybe towards let's say holding trades for a few weeks. So maybe big picture is not that important, but still, I mean, it gives me the bigger perspective of what I should be aware of rather than surprised. Okay, so what we are seeing here, well, the euro dollar has been moving or chopping even to the downside here since 2008. And notice that so far we have seen a move into the 78.6% compared to the previous 5-way price. Now, in the Elliott Wave terms, based on the overlapping decline and the important fib, and also if we respect that the previous rise was in 5 ways, well, I think that we really should be aware that maybe this reversal could be happening on the euro. There was latest ECB intervention on this pair was back in 2000, okay? So, of course, these kind of interventions or stronger currency can help to bring down the inflation, especially if you're a net importer. So, so I think that if the inflation will successfully come down or at least slow down, I think that the euro dollar could really see a stabilization in price here. So let's say 2023, and then maybe going into the 2024, I think that euro dollar will rather be higher than lower, looking at the current rate. Now, also looking at the more short-term charts here, this one can be a little bit tricky sometimes, you know, because I still realize that it's not easy to say that where we are bottoming, especially if you are not seeing the 5-wave rise from the lows. Now, if you are new for in Elliott Wave theory, well, then always when you see this sharp downtrend, okay, a very strong bear market like this one, if you think that market has bottomed, what you have to see is a 5-wave recovery. It can be on a smaller scale as well. It doesn't necessarily to be a very big 5-wave recovery, but higher degree, of course, makes a reversal even more powerful. So for now, if you look at this reversal, this structure from the lows, that's not a 5 waves up yet, okay? So in my opinion, this can either be even some kind of a wave C extended lag, potentially even wave 3 if we'll rally further. So it's very tricky. I would say it's too soon to say that euro dollar has reached an important low here. But what is good with Elliott waves, that Elliott waves are fractal, okay? Means that you will see the patterns in each in different degrees of time frame. So if you look closely on the next 4-hour chart, you will actually see that despite despite the fact that I don't know if important low has been reached or no, we still were able to predict the potential intraday support and now looking higher. So looking at the 4-hour chart, to show you what I'm talking about. Looking at the 4-hour chart here, notice that I'm leveling. Let me check. Switch it. Okay. Notice that I'm leveling or tracking this rise here from that lows as a potential 5-wave rise. Okay. And I'm not sure if this is wave C, okay, of a corrective rally, because if it's correction, then you know that the structure will be only made by 3 waves, and then you will see a reversal to the downside. Okay. Like this one. Or maybe is this wave 3, meaning that the current lag will become wave 3 and you will see a 5-wave movement rather than a 3-wave rally. So what I wanted to say here is that both lags, wave C and wave 3, these are motive waves, should be made by 5 sub-waves, right? So at that point, when the price was pulling back earlier this week, I said that to our members and also in the premium services in the commentary, that no matter if this is wave C and that we will see a resistance soon, or maybe if it's a wave 3 of a new bullish trend, in either case we should see a push to the upside, okay, because this substructure was incomplete. Also, I really like the basic technical analysis because it just sometimes it just helps to stick with the basics, the old theory, and then maybe just support your idea with your Elliott Wave approach. And notice that here we have seen pretty aggressive break to the upside above the resistance levels. Okay, not only just a minor break, it was actually an accelerating price action. And this type of a move for the important resistance, if it occurs on the next pullback, I want to see the same level, which obviously seemed to be important, to act as a support. Okay, so this actually was very nice confluence here, because we also have been tracking wave 4, which retraced for the 38.2% and was able, so the pair was able to stabilize at this support level. So broken resistance becomes the support. So I think that the euro dollar is now in a 5th wave, could see more upside, 105, 106, watch out for potential these levels. But then again, what happens after 5 waves up? Well, the market will reverse in 3 waves. So 3 waves minimum. So we'll see if maybe this will be then the next drop will be maybe wave 4, or maybe will this be start of a new bear trend. I don't know, because I don't want to analyze the markets too far into the future. I just want to stick with the current trend and just respect what is going on now and take advantage of this. Okay, this is what we have recently done here on euro dollar. Now let's take a look on cable. Now cable also, as you know, was in a very similar situation based on the intraday structure. But before we go maybe to some of the intraday charts, let me review this one first. So what is this? This is actually the ETF, okay, of the British pound. And notice that back in, it was in September, I believe, right, this capitulation. Notice that there was plenty of volume down there, okay, when this massive move happened. As you know, there was still fear when this cable pound came to the downside. In fact, this fear was not surprised because we have seen prices touching all-time lows, even we passed these 85 levels. But keep in mind that Elliott waves is actually a theory that describes how the people behave, how the crowd behaves, and more importantly, specific patterns can help you to identify if the crowd is very pessimistic or very optimistic. If something moves into the extreme, then we know that this cycle sooner or later will change. If everyone thinks that that Argentina will win the World Cup, well, maybe will not, okay? Because sometimes it's just something that is too obvious. It really may not work. So you have to keep in mind that this sentiment moves and changes in cycles, okay? In my opinion, this reversal is not a surprise here, especially not from a psychological perspective. Also, based on the Elliott wave theory, again, we had this trend line. I've been tracking this trend line, these levels when we were breaking lower, okay? And more importantly, always, not always, but usually in the past, when time has seen a massive drop, okay, there was always period of a very strong reversals and recovery on pound. It occurred here, here, even here after this drop, and here as well, even here, and even this 2000 was a very nice spike to the downside and then reversal. So when this happened, I also was expecting something similar. And this volume here on this ETF was just another indication that obviously those who are shorts are getting scared. They will sell their pounds and buy even more dollars or something else. And usually, as you know, when you make such decision, the markets will will make the opposite reaction. That's how it works, unfortunately. But that's all psychological aspect. So where we are now? Well, if we consider that this is here potential wedge formation, and again, just trying to stick with the basics, and again, don't want to predict maybe a direction too far into the future. Again, if we are bouncing from the lower side of the wedge, what would you expect? Okay, if this wedge is still going to stay in play, well, that market will maybe to the upper side of the wedge, right? So I think that there is a real chance that either we just stay sideways or even continue to the upside. Now, looking at the intraday charts here, notice that we are coming out of this triangle consolidation. We've been tracking this one to our members closely on our chart for the whole week, and we said that we see prices in a wave 4, expecting a break push to the upside, and we even identified a few important supports that we were watching. So the first one was actually obviously this trend line here, because if it's a triangle, this trend line should not be broken. The second deeper support was around 1.1710, because you never know if triangle, which is a complex correction, if maybe this type of a correction can become even more complex. You have to keep in mind that. That's why we always in those kind of patterns try to highlight two important support levels, because I understand that if I would say that this is a triangle and that's it, and will not leave any other options on the table, what potentially reader or client may do? Well, maybe they will say, okay, so stops will be placed below this wave A. Okay, and then what can happen in a complex correction? Market moves even lower, forms a different pattern, clear the stops, and then reverses higher. So that's why it's very important to understand that complex corrections, like a triangle, can become even more complex. Okay, and then you see maybe this triangle placed in a wave B or something. So that's why it's very important to be open-minded and be aware that there can be much more complexity going on until you see a breakout. Okay, but yesterday when we have seen this breakout, it was very clear that obviously new highs are coming. But now again, what's next for pound? Well, notice that we can clearly count now 5 waves up here on the intraday basis from ending point of a triangle. Okay, that was a minor wave E. So now when we can count 5 waves up, what follows next? Well, after 5 waves up, market will obviously try to slow down. Maybe will not slow down immediately. There are always some surprises in the market, some extensions, but just be aware that maybe buying cable here at these levels may not be a good idea. Okay, because we can already count 5 waves up, and again, market could make a setback. And what I said earlier on the euro, when important levels are broken, those same levels could be maybe treated as a potential new support. So if you look closely here, that was a very nice break to the upside. We retested here in a wave 4. We printed even a new high here. So if we are going to see a next pullback, and maybe you are a fan of bulls here, what you want to see that this support around 1.212 or 1.2 level, this round figure, will hold. If this will not hold, let's say that we see a free wave drop into this area. If this will not hold, and instead you are starting to see aggressive drop, okay, through this level towards, let's say, 1.1950 or so, then obviously it means that this push to a new high, this break to a new high, the previous extremes, was just a temporary move, and that was a reversal. Okay, and that we are most likely later on going to see even lower prices. So moves out of a triangle, keep in mind, are usually the final in a higher degree sequence. Okay, and you should be aware of that potential limited upside, especially if you see 5 waves up. So I clearly would not be buying pound here, but I potentially could pay attention to see to the price to see what will happen here on this 1.2 level. So overall, it could be turning bullish, but I'm aware of potential pullbacks here. Okay, now let's take a look on Aussie dollar. Now Aussie dollar is coming to the upside, but I must admit it was quite tricky. I was surprised that wasn't being much stronger than currently it is. I mean, we are seeing stocks doing quite well. In fact, the S&P 500 is approaching the new highs. We've been bearish on the US dollar, but still Aussie somehow was struggling, and maybe it was something due to do with China. As you know, there are new COVID restrictions, or I'm not sure if they are already or they are coming because of new COVID cases. So this is something obviously that impacts the Aussie. And also, if you look here, what's the next important market that you should track whenever you're looking at the Aussie is clearly Hang Seng Index, copper, Chinese yuan, gold, and the S&P 500. And well, from all of them, okay, it's very good for Aussie when all of those are in very same direction, okay, because then everything works in favor of the Aussie. But if you're starting to see something that some divergences here, like we have recently experienced on copper, well, maybe that's something that can hold back Aussie a little bit. So notice that this is only a counter-trend movement, a free wave up on copper, okay, here. So if that was a free wave up, well, you should be aware that potentially maybe further weakness here could cause some issues on Aussie, okay? So maybe that's one of the reasons why the Aussie is not that strong. Also, if you look here, well, we are testing this trend line. We came back to this bullish level, but not really breaking through yet. So we are testing this trend line, and clearly bulls are struggling. But if we can achieve this, can make this breakout. Today is Thursday, probably nothing will happen because of the Thanksgiving in the US. But tomorrow, Friday, well, let's see what will happen then. But maybe Friday will also be very slow because it's now on Thanksgiving, US traders are away. Tomorrow is Friday, so I'm quite convinced that a lot of traders will also take off this Friday as well. So it means that trading conditions can be very thin. So during this period, maybe there will not be any important or real breakouts yet. But looking at the 4-hour chart, well, we came very nicely to the upside out of this bull flag, and looks like that fifth wave is in play. Okay, but again, is this fifth wave belongs to higher degree wave 3, meaning that new bullish trend has occurred, it has started here on Aussie, or is this going to be only wave C, and you are going to see more weakness? Well, in either case, again, this is how I analyze the markets for this week. In either case, I was looking for potential support for our rally back to the highs because we haven't seen a completed 5 sub-waves within this wave 3 or wave C. Okay, so as long as we are currently above this wave 4 support or invalidation level here at 65.50, that's how long I will try to keep on the bullish side of this pair. If obviously we see an overlap with this level, especially if we see a 5-wave drop, then I will turn immediately back to the downside, back towards these levels, and could potentially even look for some shorts if this very structure would be impulsive and nice and clear, obviously. Okay, so again, you can see that I'm trying to be very careful when looking at the Elliott waves. I'm just trying to be open-minded and not forcing the wave counts, forcing my bias or what should happen, because I have no idea. I just try to take advantage of the structure and price action and the personality of this price moves that I see on the chart, and then maybe decide based on this, decide to take an action. Okay, now let's take a look also on the S&P 500, because it's all we have what, 15 minutes left. So the S&P 500 big picture, unfortunately, I don't have any real good news for you. I mean, not regarding the bullish call, but regarding the near-term price action, because we are still not seeing the breakout. Okay, maybe it will happen, but for now we are not seeing. Why? Because we are seeing the current price, current reversal from the lows only with 3 waves so far, and is moving into this resistance line. So as long as this resistance is not broken, I cannot say that ABC correction is finished. However, maybe this will occur towards the end of the year. Now, seasonality patterns suggest that usually when the stock market is down since start of the year, like now, then maybe we can see some rally into the November, December Christmas rally. So into the end of the year, you may see some reversals. So maybe that's not a surprise to see this reversal, but as I said, the important would be a breakout. If we can break this trend line and then maybe even rally towards this wavy resistance, then I think that much more gains could follow in months ahead. Okay, but for now, I also have one scenario, one option on the table if maybe this trend line holds. Now, this will be this wave count, where notice that I'm looking at the ABC wave X and another ABC formation. So if this trend line holds and we maybe even see this kind of a breakdown below this channel support, then I think that we should be aware of another new low. Okay, but what's the best thing about both of the wave counts? Well, that I'm tracking either completed ABC correction or maybe this WXY correction is still in play. But best thing of both wave counts, different interpretations, is that both suggest that the drop from all-time high is corrective. I'm not sure what, fundamentally speaking, must to happen this market to turn around. Maybe let's say that Fed was rushing into hiking rates too fast too soon because obviously they want to have higher rates so that they have more room to adjust the rates if needed, especially if there is a recession. Okay, so I'm sure that they are aware, as they already said on these minutes yesterday, that they are aware of that higher rates can hurt the economy. That's why they should slow down a little bit. Okay, but if they are going to be too aggressive, meaning that that companies will have much bigger issues, and this could potentially cause more economic downturn. And obviously, if the recession hits, okay, the Fed will stop with hikes. But as you know, after the next very strong drop, usually the markets will stabilize because that's when the Fed will come back in, and with their policy decisions, they will try to stabilize the market. So maybe some shocks have to happen so that the Fed will not be aggressively or hawkish anymore, okay? Because unfortunately, that's how it works. Now, looking at the next one, which can be, we can look at DAX. So German DAX, well, this one is very interesting. I mean, why? Because it's acting much stronger than we are seeing on the US markets. Okay, so this is quite interesting if we consider that we had this energy crisis, we have Ukraine-Russia issues. So there are plenty of inflation. There are plenty of issues in the euro, but there are still investors seem somehow are feeling some positivity. I don't know, but it's very interesting to see prices that high. Now looking at again, I have some two wavecounts here, but looking at again at this trend line, notice the same trend line, the similar trend line, I would say, compared to the S&P 500. Well, this one has already been broken here. So I think that the more gains here could be in the cards. Why? Because if you look closely, you can clearly see that this is a very strong leg, right? Okay, let me just try to explain something more here. Notice that we have seen a very massive break to the upside. And the first breakout, okay, that occurred actually occurred through two trend lines at the same time. Firstly, this was the upper line of this channel, okay, and then you have this falling correct trend line. And notice that this upper trend line of this channel then reacted as support. Why I'm highlighting this upper trend line? Well, because if you are tracking an impulsive formation, okay, then this impulsive formation will typically see the breakout within wave 3 with a break above this upper trend line. Normally when this happens, that's the signal that market is accelerating rather than slowing down. Okay, so usually accelerating price action occurs in a wave 3, in an extended lag. And that's why I would count this as an impulse. On the opposite side of that, if you have this kind of a channel in a corrective formation, well, this same trend line, okay, will then react as a resistance, and you will see a reversal to the downside if this trend line holds. Okay, but you can see that this same trend line now was broken, then retested, then market jumped even higher. So in my opinion, this makes a very nice bullish case and suggests that we will see even further gains here. Okay, so that's why I'm highlighting this trend line. This is called the base channel. So if you Google Jeffrey Kennedy's channeling technique, you will find, I believe, plenty of material how to spot or how to label the wave counts in combination with channels. It's really helpful. Okay, so you can also check our Elliott Wave educational videos as well. We have also 70% off on Black Fridays on our material as well, where we cover this as well. Okay, so now when we are tracking this impulsive recovery, Well, I think that this trend obviously should stay bullish until we can count 5 waves up. So watch out for potential wave for pullback, then even more upside. So what would be my target? Well, I think that we will sooner or later retest these highs here around wave B, but I'm not sure what will happen up here. Okay, we could potentially slow down for a higher degree drop there because I also have another wave count which suggests that this could be even wave C of a potential flat formation. But again, that's an Elliott Wave hatch. Even this one suggests that we should stay in upturn because wave C is also a motive wave. So this trend, again, even if I see limited upside, well, still this trend should stay up until we see or until we can count 5 waves up, okay, from that lows. So I hope this makes sense. Because the structure of a flat is a 3-3-5. Okay, so you expect a 5-wave rally for wave C before this full correction can come to an end. And normally that occurs at the area of a former wave A here. Okay, let's take a look. Let's take a look on crude oil. Okay, so crude oil. Now, crude oil has seen some drop, massive drop at the start of the week. Actually, it was Monday, Tuesday. It was also one thing. There was some news from Saudi Arabia. Then you had China not lockdowns, but these new COVID cases. But more importantly, there was a new rollover. So some traders were holding their positions on futures, they will roll from one contract to a new contract. So it was a rollover from December to January contract, and that's why we probably have seen this kind of drop. So firstly, traders will sell into the current contract that will expire, and then they will buy into the new one. So that's why maybe we have seen also in combination with the news, obviously, why we have seen such a reversal. But why this drop is important? Well, because we retested these lows back from September. And what this means is that the whole drop from March highs is not in 3 waves, but rather in 5 waves. Okay? So if that's a 5-wave movement, what it means? Well, it means that this counter-trend movement that we are tracking from the March highs is going to be much more deeper and more complex, okay, because that's still for now only first leg, okay, first leg of the higher only first leg of the higher degree counter-trend action. So I think that it will be quite tricky for another clear direction for crude oil going forward. I mean, it's not really a surprise if you consider how far and how fast crude oil moved. Okay, that was a very nice, clear directional move here. Okay, so normally after this phase, new phase will come. So that was an impulsive phase. Now you are in a corrective phase. Okay, and this corrective phase sometimes can be very tricky, but I think that there are some very important support. The first one is now here around $70 per barrel. The deeper one is around 60-62. Okay, so I think that somewhere around here we will see a support for Aussie, and then maybe some recovery could occur up into wave B. So not really that clear crude oil, or I will not say not clear. I mean, it's clear to me, but not really. Not really. I'm searching for some word. Not really the best looking wave structure for potential setups. Okay, at least not at this stage. Maybe something more interesting could occur on the intraday basis after a completion of this 5-wave drop. If we are going to see maybe then a reversal in 5 waves, okay, something like that, then buying a pullback could make sense. Okay, but for now, I think that I will just observe it from a distance here. Okay. Now let's take a look also on dollar Mexican peso. So dollar Mexican peso, well, I really like this one. Okay, so this will be the last one that I will cover today. I really like this one, and I think that I also share plenty of material on our page on the FX Street site when we share our articles. Back then, I think it was 2 months back, I said that what's really interesting about dollar Mexican peso is that despite the fact, okay, that the US dollar has been moving significantly to the upside versus pound, versus Aussie, versus NOK, versus CAD, versus Euro. Well, Mexican peso, okay, these are the one that I just mentioned. So what really is interesting or fascinating is that Mexican peso, despite very strong dollar, was able to stay sideways here, okay? So it was not following the same pattern that we saw on other pairs. So I said that, look, when this US dollar trend will come to an end, dollar Mexican peso should break through the support. Okay, so what we have seen is market actually, this pound, Aussie, euro, all of those first. Now, by the way, this is the inverted scale. That's why we see a reversal here to the downside, not to the upside. So what happened is that all of these markets reversed, and we can clearly see that dollar Mexican peso easily broke to new lows of the year. Okay, I believe we are already there. We will check this in a second. So if not, they are still to come. So I think that Mexican peso, obviously the rates in Mexico are much higher. Now if the Fed steps back a little bit, well, maybe that makes even better bearish case for this downtrend to continue. And looking at the wave structure now, also of course I compare the strength between the currencies, and then if I see that Elliott Waves also supports this idea, this then will have my attention here, a very closer look. So what I see here, very nice 5-wave drop from that high that occurred after this COVID crash. So this reversal in 5 waves suggests that market stopped and that we are headed lower. And notice that we had a very nice healthy consolidation. It was a triangle, okay? And triangle, as you know, can cause a very sharp breakouts when they are finished. And I think that we see room for more weakness now. At tracking wave C, either we will retrace all the way back to this February 2020 pandemic low, potentially even towards 2017 lows. Okay, so I think that this is a very nice clear pattern that can take us much lower. Also, if you look here at the 4-hour chart, notice that we have a very nice wave 1, 2, nice extended wave 3, wave 4 that stopped at this resistance. Now we are headed lower for a wave 5. Okay, so I know that sometimes with the sub waves this can be confusing, especially if you're not familiar with the Elliott waves. But notice that if you just move the wave count, okay, just trying to focus on impulses and corrections, and you can clearly see the difference. Okay, that was a very strong move, right? Then we had consolidation period, and when supports were broken, we had another very strong move, and now we have another consolidation. So, and then you know that Elliott waves suggest that market moves in 5 waves in one direction. Okay, so what would you expect? Well, 5th wave is still missing if this is a consolidation. Clearly this fits to be perfectly like a wave 4. So watch out for more weakness here into wave 5. So 19 area I think could be seen here. Maybe even as long as we are trading below 19.60. Okay, traders, thank you very much for your attention. I hope that you enjoyed this presentation. If you want to have more updates, make sure to check me on Twitter. Okay, that's my Twitter feed. I mean, you will have to put this into Google maybe or Twitter directly to find me. Or if you want more updates on a daily basis, we have, as I said earlier, 50% off for lifetime for monthly subscription, and you also have offer on a yearly subscription, and also the Elliott Wave educational materials educational videos are 70% off. Okay, traders, I hope that you enjoyed, and talk to you next time. Bye.